In defense hardware manufacturing, financial reality is usually written in heavy metal and thin margins. Massive overhead and long production cycles squeeze profitability. In fiscal 2026, Data Pattern's net revenue reached 9.24 billion rupees, up 30.6%. Fourth quarter gross margins hit an unprecedented 73.4%, software-like returns for a hardware contractor. This profitability is backed by a record-high 9.26 billion rupee total order book. These returns are the intended result of a corporate architecture designed to decouple revenue growth from traditional manufacturing overhead. Data Patterns operates a sprawling manufacturing and design facility, employing nearly 1,100 engineers. Their financial returns stem from a specific operational philosophy, the reusable building block architecture. Instead of designing systems from scratch for every contract, the company develops foundational technological IP in-house. This includes core elements like advanced signal processors and transmit-receive modules. They maintain complete control over the entire lifecycle of these components, from initial design and prototype testing through to final manufacturing. Owning these fundamental building blocks allows them to bypass the role of a low-tier parts supplier. They act as a full system integrator, capturing the profit margin at every step of the assembly process. This blueprint illustrates specific components designed in-house, like antennas and electronic warfare receivers. Owning this intellectual property means standard building blocks are rapidly recombined to meet wildly different military specifications. This operational leverage directly enables the production of high-end, complex defense systems. We see this applied in high-stakes environments, such as the complete assembly of their transportable precision approach radar. Traditional bespoke manufacturing requires engineering entirely new technology for almost every distinct government contract. By relying on their own established components, Data Patterns essentially zeroes out the marginal research and development costs for new derivative products. That creates a massive, defensible economic moat. In the defense sector, capturing the value of an entire system rather than an individual component significantly shifts the scale of available contracts. The building block model elevated Data Patterns to prime contractor status, delivering complete, mobile defense platforms like these field-deployed tactical vehicles with advanced electronic warfare suites. This strategy is actively winning international business. They successfully exported their transportable precision approach radar to Europe, passing rigorous site acceptance tests. Their IP translates across environments. Data Patterns integrates their modular systems directly into advanced airborne platforms, including modern fighter jets. Moving up the value chain to full platforms drives higher per-unit revenue and opens lucrative export markets entirely inaccessible to standard subcontractors. This profit and loss table for fiscal year 2026 clearly maps that engineering strategy to the bottom line, with net revenue crossing 9.24 billion rupees. The driver of their fourth quarter profitability is the staggering drop in raw material costs, falling 2,447 basis points year over year. Relying on their internal library of electronic building blocks severely reduces their dependence on third-party suppliers, preventing margin leakage to outside vendors. That cost control moves through the income statement, evidenced by a 148.5% year-over-year increase in Q3 operational profit. That profit engine remains stable throughout the year, closing out FY26 with an overall EBITDA margin of 40.1%. The building block model is a direct, measurable lever for structural cost control and aggressive margin expansion. Developing that foundational IP requires immense upfront capital. This capital expenditure layout shows the scale of their commitment, detailing 185 crore rupees invested in infrastructure over the past 5 years, with another 150 crore planned for the next 2. A significant portion of that capital, over 131 crore rupees, is dedicated exclusively to research and development for future-ready radar and electronic warfare systems. They financed this rapid expansion strategically, utilizing qualified institutional placement funds specifically allocated for advanced product development. These heavy, continuous capital investments create a high financial barrier to entry, protecting the company's premium margins from new competitors trying to replicate their model. Looking forward, the company is positioned to capitalize on domestic tailwinds, particularly Make in India mandates and government bans on imported defense hardware. This visualization charts management's confidence, projecting a target pipeline of 20 to 40 billion rupees over the next 24 months. The pipeline is protected by a diverse sector mix, heavily anchored by radar at 30% and avionics and AMC systems at 33%. In the immediate term, they expect to secure an additional 2,000 crore rupees in fresh order inflows for fiscal year 2027 alone. The convergence of domestic defense mandates with their proven export capabilities makes this aggressive order pipeline highly executable. Management has issued strict forward guidance for FY27, maintaining a 20 to 25% revenue growth rate while holding EBITDA margins steady at 35 to 40%. Those margins are supported by the versatility of their technology, which secures everything from naval fleets to strategic platforms like the BrahMos supersonic cruise missile. The broader market traditionally evaluates defense companies as simple hardware fabricators, dependent on long, unpredictable government procurement cycles. Data Patterns demands a different valuation model. They operate as an IP-rich defense electronics ecosystem, capable of fiercely defending premium margins while scaling their technology globally.